All right, y'all, we're live. I figured out YouTube Live to see the chat, even though it's not popping like TikTok. We're waiting for some people to get in here. Sorry, I was eating some popcorn. Okay. I don't know why I was doing this. I'm not doing full screen on YouTube so I can see the chat, so it's a little zoomed out on YouTube. Okay, y'all, we finally got a win today on the charts. If you live traded with me this morning, it was a good day. I left both of my positions up to show y'all what it was like today. What is that? I think OBS does not work well with my Ninja Trader. I think I need either a bigger computer RAM or something, but we had a loss, which I broke my rule. My rule is we're gonna backtest this too today. We're trading only the 950, 910 macro reversal. So inversion for value gap or reversal, right? We got a candle close below both of these lows. The displacement made the fair value gap that was to inverse. So I should have just waited for that. I got in, high stop loss, lost $160, and then made like 400 or 500 back to have a 260 gain. Then we inverted this fair value gap for a down. Thought it'd take it all the way down. We did not. So my bias was the equal highs up here, right here, and it smashed them. So this trade trumped. And I said that too. I said the macro trade is going to be the trade of the day. It's going to be the trade that goes up the rest of the day. My stop loss was tight though, so... Oh no, it didn't stop me out. My stop loss is way down here. So yeah, I could have held that trade. I mean, it was all day. What time did it hit my final TP? 1:15, which is, that's not that bad. I be acting like it's so long. So I should have held. However, once we got a displacement candle, I think I sold this first trade like here. On the second candle on the wick, like this, something like this. It was a good trade though. It was still almost a 1 to 3. See what I'm saying? It's still good, so I'm gonna get greedy. So yeah, this is what we're gonna backtest today. We're gonna backtest 1 minute inversion for value gaps in the macro session, 1 minute reversals in the macro session. I took this live. I even called this trade live to get into it and take it, and then you could have just, you probably would have sold once it start reversing a little bit, but you still would have got a nice little rundown before you had to sell. So I'll be trading live on Monday, and y'all can join me for the free skis, and then let's start backtesting this. So what we're doing now, we're doing 1 minute reversal. Hold on, let me get myself situated. 1 minute reversal on the macro. So I don't even get on the charts till 9:45 now instead of 9:30. Most people just sit at 9:30. So let's go on a 30-minute and let's mark some liquidity, because that's what the main liquidity points are. I mean, they're not that great. We'll do here. We'll do here. We'll do buy side here. And then G's, we'll do way up here. And then we'll look on the 1 minute for one in between here. Okay, go on the 1 minute. We're marking 950 to 1010. And it's supposed to happen, honestly, like every hour, honestly. To 11:50, 10:50 to 11:10, and so on. Okay. Let's see. So basically I waited until we got reversal or inverse in this gap. Okay. Ran down. So hopefully we'll probably see liquidity in reverse. Kept going down. Okay, we got a big gap here that once we close above this, we're going up. Do we get a close? We don't yet. Okay, it is technically, okay, there's one there and there's one green one here. So you could have entered off the candle close below that one. Was not a bad of a trade. You're basically waiting for one of these to get disrespected. Let's see, 1 and 2, 5. Okay, it hit it. It wicked it, 1 and 2.5, and you're good. Now, candle close above, you can get back in again. But that's basically the strategy. It's not that great. I mean, it's very great, but you just have to pay attention to which, when you're in a range like this, you have two fair value gaps. We have a red, a bearish, and we have a bullish on this green candle. You have to wait for one to get disrespected. I got faked out today. I took a loss, as y'all saw, and a win. My win was bigger than my loss. However, it just is what it is. Or you could have waited for it to come back up here if you trade longer than, you know, I mean, this is only 20 minutes. However, you want to trade, I like to trade up until noon is how late I like to trade. So we could wait for it to reverse back up above one of these before noon. You can get in this trade for, like I said, 1 to 2.5 is still good. It hit it, it wicked it right there. And it went lower, so boom. That was your trade. So you just wait for a confirmation. Or this tap into it, 'cause this is technically a reversal too. They have, in the macros, there's these reversals that are like, they're still continuation plays, but they go up a little bit with this green candle, and then they'll continue down. I've noticed that in the macros too, and usually it's the inverse of a, you know, the opposite. So if we're going down, you want the inverse of a bearish. A lot of people trade that. However, you can trade it the regular way. We got a strong displacement candle, and then you got a fair value gap, regular ICT, to get in on this fair value gap for a nice fat trade. You see what I'm saying? This is what we want to trade. It worked today. I'm going to see how good it works. I'm trying to just get a strategy for me where I don't get faked out and get trigger happy. That might be just a me thing as far as me just needing to be patient. But I'm trying to find a strategy that works with me not being patient, if you catch my drift. And it worked beautifully today. Going to 30 minute. Sometimes like there's a liquidity sweep like right there that, I mean, Jesus, I don't even know what's going on 1 hour. We don't have any liquidity backed up. There we go. We have one. How did y'all do today? Did y'all make some money today? Did y'all just watch the charts? Did you lose? Did you overtrade? How was y'all's trading today? If you traded. If you didn't, it's fine. Because, you know, some people don't even trade on Fridays. We'll mark these buy side ones. And, 'cause even like I've taken the 9:30 trade and it's worked out for me, but then the macro trade will be the one that really just is beautiful and sets you up for the day. Okay, we have our liquidity points above and below. I always mark off above and below because it can go up, it can go down. I don't go in with the bias. Sometimes I do. Like today I was confident it's going up. I thought we were gonna, like my trade this morning that was a win went up into a breaker, and I thought the breaker could go down like it did yesterday. I have a problem if I lose a trade, I'll hope that whatever I did, whatever the market did the day before, it'll do again, and it just ran up all day today. So I could have held for way bigger profit. It ran up a lot slower than I would like because there was no news, so I probably wouldn't have held it that long. However, it did run up into my bias and just kept going higher and higher. Because inverted fair value gaps are just a beautiful thing. We have a kind of liquidity sweep of all these liquidities for a reversal. What is happening? Yeah, I feel like my computer, which is crazy because this is a nice CPU computer, but obviously I got it more for drop shipping and not trading at the time. But it is what it is. I might give me an iMac soonish, but it's not that bad. Okay. We do have a value gap here. We close below it, we're going down. And let's see if it makes us a red one to go up. There's some liquidity, you know, there's one internally here, and I think we already had a big wick. I can't really tell. Yeah, we had a big wick already. So let's just see. If we go down, we have some internal liquidity, you know. Here, if we get good risk to reward. Okay, yeah. I didn't pause it fast enough. So, candle closed below right here. That's the trade. Boom. Stop loss, however you want it. Usually inversions don't have that much. That's a 1 to 1.8. Our regular was way down here. I know Dodgy's DG, Ryan, he just takes them right to this first liquidity. I like to take it at least for a 1 to 2, which is not much further. So let's see. Okay, wicked me perfectly. We've been out the trade. Boom. It's starting to reverse a little bit. And then we have a red one here that if we close above, we'd go back higher. Luckily today on my trades, I hit my take profit, and then we got an inversion right after to get right back in if we wanted to. It was so beautiful. So this is what we want to trade. Macro reversals on an inverted for value gap. This is my new strategy. Short scalps, I can risk a little more. I can full port my funded accounts higher and make like $1,200 a day without having going into drawdown $1,200. That's what's happening here. And even we can go to the, let's go to the 1 minute without going to the 30-minute first. And let's just see. I hate when it doesn't take you to where the chart is. Okay. So on the chart, the 1 minute chart, we have liquidity here, and I always reiterate this: liquidity is just swing highs and swing lows. Obviously, session highs are higher. Obviously, long wick ones are higher. Like the session high is technically here, but that long wick is there. We have a prominent one here, and then we have, you know, like an internal one here. This one is already swept. You see what I'm saying? Like that's all liquidity. So that's your take. You trade IFGs? Yes, I do. I just started and I realized they work way better than regular ones, in my opinion, to spot reversals. Since I'm a reversal trader, like most of us are. Okay, let's mark 950 to 1010. So you can just do this. I'm trying to get a simple strategy. Nothing crazy. A simple beginner-friendly strategy that we can just trade every day. And if it doesn't happen, we don't trade. And if it does, we make money. And look at that. Just ran. What is that? 930. Where was the 930 candle? I mean, we did get a wick. That is something you would want to catch. Nice. Don't give up. Got funded this year using them and withdrew $60K last month from Apex. Period. Good for you, dude. $60K? That's boss. How long have you been trading, if you don't mind me asking? How long did it take you to do that? I mean, that is a nice wick. But see, sometimes I get faked out on this and then it'll still just go down. But yeah, how long have you been trading SG to get a 60K payout? And it's funny because I had to block someone on Instagram today because they're like, well, if you're profitable, why are you trading a funded account? And I'm like, so many people trade funded accounts that are profitable, that are millionaires. Like, what are you actually talking about? It is on Instagram. I see why people don't get back on Instagram. It's very toxic over there. 2.5 years into profitability. Cool, good for you. I'm like 10 months in. I took 2 months off. I took a month off to travel, and I took a month off to go back to work and film. Yeah, my algo led me to another girl trader. Yes, there's so many of us now, and I love that. I feel like we're all like connecting, like especially on Twitter, and that's why that guy on Instagram today was literally killing my vibe because it's like, dude, we all the traders have been kikiing on TikTok and Twitter. All of us, beginner, girls, guys, experience, like we've been having a good time. Are you in any groups? No, I don't really do groups. It's hard to find someone who trades like you and it distracts you. So if I trade like ICT or IFVGs or whatever, I mean, Dodgy's DD does it, but like it's hard to find someone who trades exactly like me now that I've traded long enough to have my own strategy kind of. Like this is kind of, I trade a certain way. So it's just distracting. And every time I trade against a trader, even if they make more money than me and they're richer than me now, they lose. I'm better at guessing the markets. I just don't execute them as well because I don't have the patience and experience they have. But like I've traded against like Antonio and like Tanya trades and like they've lost and I've won. So I don't really like trading in groups. And then it gets me more confident and then I still trade bad. Okay, so what do we see? We got a breaker. We have no inversion for value gaps at all to play off of. We do have a market structure shift and a breaker tap. We could wait for something else. We could wait to invert this, but I kind of like that breaker. It's technically not 1010 yet. I mean, it's right at 1010. We'll mark it, and then we'll see if we get a better entry later once we replay this out. Take profit. I mean, we don't have to swing low until way down here. And that's a 1 to 4, which is very good. Let's see if we get it. No. Exactly why you wait for confirmation in your strategy. Boom. Okay. Pause. That is what we want. The reversal. So this wasn't enough. We had no fair value gaps at all made in this. So I shouldn't have took that. We did get a breaker tap, but I don't really trade breakers like that. So I don't even know why I did that. And then we got a bunch of fair value gaps made now to be inverse. So we have this. You want to get that first one. Boom. That's the trade right there. Candle close is a little far from the fair value gap. And then taking it down to that liquidity right there. 1 to 3. Beautiful. Beautiful, beautiful, beautiful. It happened right. That's what we're waiting for. That's what we're waiting for. If it's not clear, just avoid it. Exactly. Since we're back testing, we're just taking it all and then we're learning from it. So that was an example of why you wouldn't have done that or you would have lost and got back in. That's all. I did take one today, but it was a market structure shift and it was clear. However, my rule was off an IFBG and not just a market structure shift. So that's what we want. Macros. I don't know what someone's talking about. Macros 950 to 1010 reversal. So yes, this 930 would have worked out for you very beautifully, but taking this, I've started trading off the 930 candle, and that was what really made me unprofitable. But just doing shit. I'm an ICT trader, and I just started trading the 930 candle for what? For what? This was a good day to do that, though. We got a down wick and gone up, but some days it will give you a strong wick down and still reverse on your ass. So you need to wait for some confluence, some for sure shit, you know what I'm saying? Next day, well, today was a good day on the charts. I'll take it. My funded account was not blown. So we live to fight another day. We live to fight another day. Okay, liquidity. Like I said, I always mark sell and buy. Some people only mark buy, only mark sell, because they're like, oh, my bias, it's going down, it's going up. I'm like, no. I mark both sides. And I usually wait for one to get taken and go together. That's it. And some days it'll just keep going down, and I'll play those two. I don't like to go in with a bias because then I'll only look for sales if I have a bias of sales, and I'll only look for like buys if my bias is buys, and then it fucks me up, versus I like to just let the market tell me where it wants to go. And it will tell you. It will for sure tell you where it wants to go. You just gotta listen. All right, now we're way, okay, hold on. Geez Louise. Replay is too fast. Okay. Boom. Booms. Bearish. Fair value gap. Disrespected. I love it when we get a candle close right above like this instead of this. That's still an entry, but it sucks when it's like that. That's how it was today. I actually didn't wait for the candle to close. I got in, like the candle was going, it wicked down a little bit. I got in and then the candle closed like way up there. That's what I did today. But we got a lovely candle close, stop loss. I don't know. It's stop losses are just, I'm gonna do below this candle, I guess. The body. Stop loss this high here for what, a 2.5. You know I like a 2.5 and above. Let's see. There's also liquidity here to reverse from. Like today, I wanted to go to equal highs. I mean, it did. It kept running today. It just like went up, traded back into my drawdown, almost stopped me out, and then went higher. Boom. Booms. Boom. We got our, I mean, it didn't hit this one, it did hit this one. So you would have just either got out for a loss somewhere down here. I mean, for a gain, a lower gain, but still a good gain for like a 1 to 2. Or you would have trailed stop at break even or did a trail stop for some gain. That's a good trade. This is what we're trading. Macros reverse off ICT. This is what we want to do as beginners. Now, I know how to trade a lot of the setups on ICT. I've seen them all. I like trading every day. But I notice my emotions don't let me sit and wait for them. I know how to do breakers. I know how to trade market maker sell model. I know how to do market maker buy model. I don't really trade power of 3 necessarily. I can see it after the fact, but not during. But I can trade a lot of the models. I just need one from my emotions right now. And this looks like it's going to be the one so far. I traded it today on live, and I'll trade it Monday on live, and y'all can join me, and y'all cannot join me, because I do feel like if you have someone who's a millionaire and profitable, I just started looking at, what's his name? Kue Thao, Kuethao, and he trades, and he's like, I'm an unprofitable trader. He just documents his journey, and I feel like he has a good following and people support him. And I was like, yo, I want that. Like, support me if you want, even as I'm learning. I had a lot of supporters when I was profitable, and I'm a firm believer. I don't give a fuck what no one says, to say what you are at that moment. If I'm profitable, I don't care if it's been 6 months, I'm profitable. And then on the 7th month I'm unprofitable, and I'll say that. And then if I'm profitable again next month, my bio will be changed back to profitable trader. Like, I'm not finna play with the whole wait 3 years. Like, you need to be in the now, and you gotta speak it into existence. Because when you put that, I'll be profitable in 3 years, 5 years, you put those things in your mind, it really fucks you up. And it either can make you very lazy, or it can make you like obsessed with trying to like overtrade to get profitable faster. You know what I'm saying? Like, just whatever you are is what you are. But yeah, some guy on Instagram was like, you're not even a real trader yet. Like, why are you teaching? I said, I'm not teaching. I am backtesting. This is what I would do if y'all were on camera. But I just wanted to do it on camera because maybe some of y'all need accountability partners and need a back test and won't do it on your own. Maybe some of y'all don't want to pay for FX replay fair. I didn't for a while, and now you want to back test with me. Some of y'all want to learn together. Some of y'all want to be like, oh, I hate how she trades, I don't want to do that, and learn something else. That's all this is. I'm not here teaching anything. And or I am a firm believer you can teach someone how to do something and not be good at executing it, especially with trading. Trading is a great space for that. I've said that many times. I've gone to the market even when I live trade and been like, ooh, I should get out here. And I see the inversion fair value gap to get in. Y'all should get in. And I'll say that, but since I'm already in a trade, I just hope my trade trumps. And I'll lose, and people who are on my live will make money. Like, I don't understand why people act like it's so hard for people to do that, but it's really not. You just have to, okay, we have a red. We did close above this red. But it's not really a reversal. I just feel like everyone should, I'm just really I'm journaling the process only because, okay, so you could have took this, because once I start making money, and I mean, haters are gonna come either way, but my whole document of my journey, it will be on the internet. So you can't say I scammed anyone. You can't say I didn't learn this shit for real. You can't say I just got on and started selling courses. None of that. Okay, let's see. Okay, we do have a liquidity here. So let's see, it either can go up there or it can reverse from here, and we wait for the reverse, which is technically the strategy. I'm just seeing if we would take a continuation play, would it work, or should we wait for the reversal? Because now we have a bunch of fair value gaps that we can reverse from as well as we're going up higher. You see what I'm saying? So, and these wicks are not giving me confidence. So it would have been maybe a small win for a 1-to-1, which I know a trader on TikTok. I mean, it was a good win on Twitter who only trades 1-to-1s. So that's what's like, don't let people shit on you. Like, oh, I'm not taking trades on the 1-to-3. I'm not doing, like, everyone's different. Trading is the prime example of, like, you can literally like 1 to 1.5s or some shit, and it makes you a bunch of money. You might like trading off fucking long candles. Like, you just trade the one candle after the long candle. Like, anything that you makes sense to your brain is what makes sense to you. Okay, so this was a continuation one. We did get an inverse, and this is what I was talking about with the continuation plays. Inverse of a red fair value gap, and there was a green one here as well. The green one would be to go down. We got an inverse of the red one because the red one was made after the green one, so the most current one. We inversed it, got in, and took it to a next point liquidity for a nice 1 to 2.5 almost. So that's a good trade. And that's it. You wait for this macro hour or 20 minutes, which is not bad, 20 minutes. So even if you're impatient, you're literally only waiting 20 minutes. You mark out these fair value gaps as they're being made. I have a fair value gap indicator that I use, which obviously it gets insane on the 1 minute chart, but you know, I mark them and then I draw them as time is playing out in real time. So I'm doing like, what was today? This morning. Yeah, this morning was this one. So once we closed, wait, what's today? Friday. This one. This is the one I entered off of. See, we got a long candle above it, and we wicked back in. This was the fair value gap that we inverted, that I entered off of. So I leave it on there, and then you could take that trade back down after this one was inverted. You see what I'm saying? I leave my shit on there, and it lined up with the regular fair value gap up here. Tapped into it, but then like I said, I wanted it at those equal highs up here, and it did wind up going up there without stopping me out. My stop loss was, I think, below this candle here. It just traded up the rest of the day beautifully, and then look, we inverse this fair value gap, and then we go down, and then we inverse this red one here to go back up. That's it. Inverted fair value gaps are really all you need. And you can, that's the only way you're gonna be able to trade on the 1 minute, or you'll get faked out bad. You'll get super faked out. And an inversion, I notice, is a way you don't get faked out. So let's go to the next session. Where's our liquidity points? We have one here. We have one here. Obviously, we have a giant gap. We'll do one at the bottom of this candle. Then the buy side, we have high of New York session, which my New York session starts at 8:30. Some people's is 8, some people's is 7. Everyone's time is different, honestly. We do have relative equal highs up here, but that might not be a today thing. And then we mark our macros. 950 to 1010. And let's see if we get a continuation or reversal. And the good thing about this trade, like, you don't even care how far it runs down. When I was trading 930, like, once it ran down, I'm getting in on the second candle and I'm taking it down. But for this, you don't even care how far it goes down, because you're just waiting for it. However far it goes down, you're gonna catch that reversal back up. You're not even worried about that big ass move. You're like, I don't even care about it. That's the good part about this strategy. It's like, I don't even care. I don't even care. It can keep running down however far. Okay, let's see if we get a fair value gap. I wish there was an indicator on here. Okay. No fair value gaps until here. So it's giving a continuation down. We have a red candle close. Tight stop loss. So it's kind of, I don't like this wick right here though, but maybe because I paused it before that minute closed. Stop loss here. Where's all our liquidity points we marked? Oh, we already passed them though. Or you can wait, since you already passed so much liquidity, you can wait for it to come back above this one if you're confident in it going back up. Let's look on a higher time frame. Okay, we did get, yeah, a major liquidity sweep. I mean, kind of. And then we do have some liquidity down here, a bunch of little swing lows. I don't know, it could go lower, it could go higher. So maybe this is one of the ones where we wait and see, because even this is pretty close. It is a tight stop loss, so you might get almost a 1 to 2, but not quite. This wick is not my friend though. We can wait for it to close above. Let's see. Okay, so we were right. See what I'm saying? Can't be scary. And if you lose, like I lost today, my loss was smaller than my win. If we lost and went down, we would have just gotten right back up. And you look at that, you could have took it all the way down for a 1 to 4. See what I'm saying? Inverted fair value gap. This is all we're doing. 20 minutes a day. These little 20 minutes, you're getting something. And I noticed that like Tanya trades that. And I used to always be like, why did she do that? Like, she could catch this whole move. But I'm like, you'll get faked out on these 9:30 early. Even like Jaden from what is it, Team Bull Trading, he said he doesn't even trade the first 15 minutes of market open. You know what I'm saying? So it's like, you don't have to do that. And I was just trying to catch like these big moves and be done. I like being done early, but I also like winning more than losing. And you'll still be done pretty fast. Like when we got in at what, 10 o'clock to be done by 10:15. So a 15-minute day. You cannot beat that at all. So that's what I'm saying. And everyone says that too. Like if you go on TikTok and you go on a lot of gurus pages, they're like, keep it simple. So I'm trying to get the simplest thing again for my emotions. You might have liked what we back tested yesterday, the 30-minute higher time frame analysis, 5-minute execution. You might like that. You might like so many other, we tested a 1 hour analysis, 5-minute execution. We did 1 hour, 1 minute execution. There's so many ways you can trade this market, and you can sit and wait for things to happen. And it's okay. There's no wrong way to trade it. I love the days when me and someone else trade against each other and we both get to win. It's not often. Sometimes, no, I mean, it's like 50%. There's some days, you know, if I'm right, it runs that way the rest of the day. Like today, it ran up the rest of the day. And there's other days where it runs down the rest of the day if I'm wrong, and you know. But most of the days, it zigzags, like ICT says. Takes out one side. It'll be doing this on its way down or on its way up, but it'll still like take out liquidity, go higher, take out a sell side here, go lower but not as low, go up, you know. That's what it does. That's just what the market moves. Okay, it is Friday, so I don't know if we want to do this that long. I do these every day, and I do them on the weekend as well, so we are I feel like the weekend we don't go as long as we do during the week. But 9:50 to 10:10. And like I said, this replay is fast. It's not going to be this fast in real life. I can do it on real time, and I think this is how it would. What the fuck? Okay, maybe it doesn't like doing it slow. Yeah, it doesn't like doing it slow. So, all right, no fair value gaps yet. Not a single fair value gap. Now we do have this one. If we're confident in this reversal, which kind of am, kind of not, because we got a long wick to the upside to go up. We went up. We have a wick here that like we swept, and then a long candle down like we did, and then 3 candles down. So I would mark out something internal like this, which we swept, and something internal like this, and then see if we, to be safe, if it comes back into this fair value gap. Maybe something like that is the trade, 1 to 2. Or you might miss out if we don't get in, because technically the entry is still right there, right when we closed above. I mean, no, it's not. This made a fair value gap. I'm sorry. So we don't have an entry unless you just trade. And you wouldn't know this fair value gap was here until this candle closed way down here. So technically you would either wait for it to come back into here, or wait for it to get inversed, or wait for another one. So let's see. Tap this in. So let's see if it will go lower. We did candle close above this red one though. That was made after ours. But let's see. Yep. So like I said, the inversions are always stronger. You see what I'm saying? You see how I say you can get faked out in the 1 minute? Because a lot of people are like, ooh, market structure shift. Boom. Fair value gap made. Set my trade at that fair value gap, tap back in, but I swear I've gotten faked out on that so much. So that's why you wait for an inversion, which we got a candle close above on this one, stop loss below, and you can take it all the way to the buy side for a 1. You can even go for a 1 to 2 because it wicked above it. So this one's not macro's regular fair value gap, it's macro's inverted fair value gap. It's not a fake out. 1 minute signals give you 1 minute targets. No, because look, we got the inverted. It is a fake out because on the 1 minute, this is still a market structure shift. We have a strong wick. We candle closed above, and we left a fair value gap. That is prime market structure shift to the downside. We even have a breaker. We broke above the breaker. That is a prime go up here, come in here, and go down. That is literally a fake out. And that's why for this strategy, it's macro 950 1010 inverted fair value gap, IFVG. Other strategies can show you that move down. What do you mean? There's no other strategy. It's a market structure shift. I'm just saying that on higher time frames, when I was trading market structure shifts, I would do it in the 5 minute. And there's a lot of YouTube videos on that. A lot of guys who make millions of dollars will tell you like they don't like trading on the 1 minute unless, and all the guys who do like trading on the 1 minute are guys who trade IFBGs like Hydra, Dodgies, DD, and all this stuff. But if you trade regular market structure shifts, you would just trade it on the 5 minute. Because on the 5 minute, this is 5 minutes. This would just been 1 candle. We already got a green candle. It wouldn't have even been a market structure shift. And not to see like this. It would just been like a strong reversal, 2 big candles. And that's why I did switch to the 5 minute for a while when I was doing market structure shifts and stuff. And then I just switched to IFBGs. So yeah. Inverted fair value gaps. That's it. Macros. And like I said, it's a macro reversal. So you would expect a reversal. Higher time frame where not necessarily, because yesterday and today, like it can come up here and this could just be a pullback, like up into the 50% of this range. That's why I don't like, I do believe in higher time frame bias sometimes, but there's a lot of days where higher time frame bias is not that clear. But if today it was strong on higher time frame, let's see. Period. But you wouldn't know how strong it was until this candle closed. So yeah, you could have got in. at that candle close, but our entry was still better. The IFG was still better. And also we have fair value gaps here to reverse off of, and here, and now we are in a market structure shift on the higher time frame. But I've seen higher time frames do this. They'll go higher to go lower, because higher time frames are the ones that actually sweep liquidity every time. So that's why, like, on a higher time frame, on a lower time frame, this is a market structure shift, but on a higher time frame, this is a liquidity sweep to go lower, and or it could keep going higher. So higher time frame bias, it was strong on this day, but there are days where it's not that strong. You have to look at mini to see bigger targets. I don't, though, because so for bigger time frames, like I said, this is for beginners. If a lot of beginners don't have the patience to wait, and you can get faked out. Like, there are many days where I know it's going lower, but it will run way higher than I ever expected before it goes way lower. It can be a down close candle on the day, and it closes down at the PM session. I don't trade PM session. I only trade New York session. So I'm not going to go off daily bias and higher time frame bias, because a lot of those times, some of the moves happen in the afternoon. I trade a strategy that works in the New York session. In my opinion, to trade well, you have to look at the chart price action only. I agree. And I trade ICT off of price action. And that's why I like ICT, because I watch price action videos, and his trading makes me read it. I guess where the market's going 90% of the time. Now, yes, I do have some execution errors as a beginner, and that's just a me thing, but like I said, I'm just simplifying this for the beginners, because as a beginner, you can make money as a beginner without being like super perfect. And that's why I like by ICT. You can trade just silver bullet, you can trade just what I'm telling you right now, and you can make a bunch of money off of it. And then eventually you get good, and then you start, being like Justin, and you wait for those higher time frame taps and stuff like that. But I also don't like to sit on the chart all day. I got into trading for freedom. I'm not going to sit on the chart all day, especially because we trade futures. You literally can sit on the chart all day. You can be on the chart from 7 a.m. to 5 p.m. It's not like options or stocks where you're at 4:30 to 9:30 to 4:30. No, that's not what I wanted. Okay, 9:50 to 10:10. We're going to do another one. So far, we've only lost what? We actually haven't lost. We took losses only because we got in too early, but the inverted fair value gaps on the macros has worked spectacularly. Let's go to the higher time frame for our liquidity points, because we're kind of we've ran up a bunch to see where we want to go. If we go down, which doesn't look likely, we're here and we're here. They can't see from the charts. ICT comes to rely on theories and hypotheses. How do you explain fair value gaps and stuff from a fundamental standpoint? For fundamentals or price action on new high? Yeah, okay, so I don't trade fundamentals. I just trade price action on ICT. I used to trade fundamentals like taps, zones, all that stuff. With ICT, you just see, like, price action will leave gaps. So ICT is the one who told me where the fair value gap was. When price action videos, they don't tell me gaps. They just tell me the market moves up. They tell me, oh no, you're right, technicals. Technicals is retail and fundamentals is news. Well, when you trade futures, I feel like a lot of fundamentals, you get the news calendar, so 8:30, you'll get news, or 10 o'clock news, but other than that, that's really all you need. Versus, like, when I was trading options and stocks, like, there could be Elon Musk tweeted something shitty today, and then a stock would plummet. Like that, like, fundamentals and stocks is very different. So that's why I don't really trade stocks anymore, because there's a lot of things that don't play into your moves. However, even like Justin Wheeler said, who a lot of us love on this chat, on this live, he said it himself. He said he doesn't give a fuck about news, because news just does what the market's already going to do with higher volatility. And I said, yes. Literally, I don't not trade news, because it's like, if it's going up, it's just going to go up crazy. If it's indecisive, it's just going to go indecisive like crazy. Like, news just does what the market wants to do with higher volatility. Like, a news would just be like, oh, we're already reversing. We got a market structure shift right here. News will just make the dump be 5 times more than a regular dump. That's all news is going to do. It's just going to give you a bigger wick. It's just going to do whatever you want to do. So I feel like ICT really helped me read price action. and it gelled well with price action versus other shit that I've learned or I tried to trade before. Okay, liquidity is high as fuck. So we're gonna mark this gap for a target if we go higher, which is looking like we are. Okay, let's go to the 1 minute. Like, what info do we get from it? Fair value gap. Imbalance. A fair value gap is imbalance. It needs to be filled. So from ICT, market goes to liquidity and imbalance. So let me see. Let's do a little lesson here. On ICT. I think I have what I need. Okay, yeah. Let's just do it on my chart. So for price action videos are like, we move higher highs, higher lows up, and then we do the same thing going down. And then you also do the same things sideways. You know what I'm saying? So with ICT, I'm waiting for entries at fair value gaps or inverted fair value gaps. So I'm always knowing when to trade. Also, side note, can't ICT not trade? Does he ever explain one? He says it's an algorithm that he studied, and I believe that because on days where a lot of stock traders and other traders are like, oh, you don't trade holidays, or the stock market is closed. Like, even like Tanya Trades will not trade holidays. I've traded bank holidays because futures market is still open and it does the same shit. Not with high volatility, like not as a bigger move. It might be smaller, but it'll still do market structure shift. It'll still do higher lows. Like it'll still do fair value gaps. It'll still do liquidity sweeps. Like I've seen it. I traded MLK Day every year since I've been trading and been forgetting it's a fucking holiday and the banks are closed. So I'm like, why isn't it moving? The only time I got spooked by the market actually being closed on holiday was Easter. I thought my computer broke because I was like, why is the market closed? But it was Easter, the Friday before Easter or something. So basically, and then like with the fib, and the fib lines up, like my fib is set to ICT fibs and like premium and discount. And just like you can just read and know where things are going. Like you know where things are retracing to. You know where breakers are. You know where, or even just like if you simplify it like I'm doing today, I'm just doing liquidity for value, inverted for value gap to the next liquidity. Like you're like higher time frame narrative, I don't have to. If I get an inverted for value gap here, my first target is just this liquidity sweep. That might not be a trade you want to take, but it's going to that part of liquidity. If we get an inverse to the downside, our first target is this liquidity. That happens. That happens all the time. And I've seen it. I've called it even when I traded it poorly. I've literally called it. It just rebalances and goes to liquidity. Now, you don't have to believe that. Like I said, you can trade any way you want. But that made sense to me the most. Because I used to trade retail. I traded support and resistance. And my entries, I could never master my entries. Because it just happens so fast. Versus ICT, I'm always waiting for my entry. And I'm never missing it. Sometimes I'm early and getting in too fast with ICT. But I'm always right where I need to be to get in a trade. And I also know exactly where to exit my trade. Not just taking a 1 to 2. As you see how we back test, we take it to a liquidity point, and hopefully it's around a 1 to 2. Sometimes I'll take it to a 1 to 2 if it's like a few ticks after a liquidity point. But that's it. The only reason why a strategy should fail is because you made a mistake. No, because everyone knows that strategy is not 100%. So some strategies will fail because the market's going to do what they want to do. But they should win more percent of the time, like 70, 60%. But yes, I usually only lose when I don't follow my rules, like today. But then I got a win today because I did follow my rules. But yesterday I did follow my rules. I just I took a sell to a liquidity point, but I wanted to take it to like 2 liquidity points after that, and it reversed from mine, and then we were up the rest of the day. So that was the only time I messed up. Other than that, yes, your rules and not following your rules can make you lose more so than often, like me, but it doesn't mean your strategy is failing. If your strategy fails, you're correlating different information with someone else, resulting in errors. Not necessarily. Not necessarily. Do you mean fails like not profitable, or do you mean just like it doesn't work that day? Clarify. J.R. George. Some people have said ICT can't trade, some people have said not, but the owner of my funded FX and my funded futures just said that ICT traders are the most profitable traders and the most amount of funded traders he has at his company. So whether he's trading live or not, his strategy works, is what I'm saying. Which fair, I get it. You don't want to learn from someone who is not profitable, but his stuff is all free. So it's not like he's charging you. And that's why I do these sessions too. I'm learning as we're all learning, but like I can tell you where the markets go. Like I've said, I've had people be on live stream with me and I've lost, but they made money because I told them where it was going to go. Execution is a whole different beast, but I'm not selling a course. Neither is ICT. I mean, he did have a mentorship for a little bit, but all his shit is free. So it's up to you, and it's all hearsay at this point. There's so many scammers that people follow. Like even more trades that a lot of these gurus we follow are fucking fake. And you wouldn't even know it. You wouldn't even fucking know it until you get in that space. The whole point of ICT concepts, right? He tries to explain why. You're saying, brother, explain why the concepts work. What do you mean explain why the concept works? It's because it's an algorithm. It's just price actions, how the markets move. That's why they work. He's telling you how the markets move and how to execute on them. Like, what more do you need of an explanation? Like how God made the markets and how, like, you know, it's just how the markets move. Markets have to rebalance themselves, especially because when ICT and SMC first came out, especially like TJR, he explains it like perfectly. Like for big banks to liquidate millions of dollars to trade for their investor or for their bank, they need to go where a lot of money lies. Because me and you and our $5, $100 trades aren't going to cover it if a bank uses thousands of millions of dollars. So a bank has to push the price to a liquidity point where a lot of orders are resting for them to fill their orders. Like for them to reverse, they need to get it up here because there's a lot of orders resting up here. A lot of people got in here. This is volume. Because a lot of people just trade volume. So volume means a lot of sellers got in right here to sell. Who knows if they took their money out here? Who knows? But there's a lot of buyers came in here. So banks need to execute their orders at these points because banks are trading millions of fucking dollars, which is so funny to me because I used to want to work for Wall Street and now I couldn't even fucking imagine because I can trade my little money and go home or go to sleep or go out or have dinner. But can you imagine losing millions of dollars on a trade at work and having to sit in the office the rest of the day? Now I see why a lot of them are on drugs and or kill themselves because what the fuck? What the actual fuck? But hey, if you work for Wall Street, good for you, dude. Because then you get benefits and bonuses and healthcare and all the shit. So I'm not mad at it, but I've seen people lose a lot of money and do a lot of drugs. I mean, I'm from an industry where people lose a lot of money and do a lot of drugs, and it's not the same. It's not the same at all. And I worked in Hollywood. Why is that irrelevant? I really don't. Bro, you don't have to know absolutely every aspect of the market to be profitable. I mean, I don't know what J.R. George is in here. That's the point. I teach you how to explain the market like that, but can't even provide the info. Yes, he does. Have you watched his content? He has like 600 videos, hours explaining. He literally explains all of it. If you didn't watch it, that's on you, bro. But you can't say he doesn't explain it. He explains every aspect. That's why everyone says ICT is so confusing because he has so many models for every different market. He does. He has a power of 3 for accumulation. He has an uptrend continuation model. He has a breaker model. He has models for everything. And he says you have to watch the charts for at least a year to see how they work. And you do. But you can get profitable with just one, and that's what I'm showing y'all now. We're gonna focus on one, because I was trading all of them, and I was profitable for a minute, but then I don't know, my emotions have changed a little bit, so I'm just trying to simplify it and just be consistent with my simple model. And as you've seen, J.R. George, from us backtesting, the model works. We took FVGs to the next liquidity point. We've been doing it for an hour now. But again, like I said, if you trade retail, if you trade trend line, whatever you trade, if it works for you, it works for you. Like, you don't need to understand ICT. But I know for a lot of people, like me, boom, IFVG, it clicked. Like, I immediately was profitable from ICT. Like, immediately. Like, yeah, I've become unprofitable and then been break even and been a bunch of things during that time. But it has made me understand the markets. I have guessed the markets. It has made me enjoy trading way more than I have ever doing anything else. And that's just me. Again, there's so many traders. Like, I love Q Banks. I love Swaggy C. I don't trade like them. The person who got me into trading, I don't trade like them either. But I know a lot of people like Swaggy C and all those guys who, even like my friend, they don't trade ICT, but they've added liquidity and they've added fair value gaps. Like, everyone I know who traded retail in 2020 are talking about liquidity now. Okay, so this would have been a trade where we either should have took it just to this liquidity point or we would have had a trailing stop. So it is what it is. We could see if it might go back up, but I feel like once we inverse another green one, which you don't even really have any, we have one here. But yeah, I don't have to explain to you why ICT works for me, but it's also just, yeah, people who are streaming want me to explain SMTHRQ. What is that? It won't take me too long to. All right, explain it. Explain it. Whatever you need to explain. Enlighten us. Oh, something. I was like, what the fuck is that? Let's see. Because technically we didn't get stopped out yet, but I think we're about to. So we would have just done a trailing stop. Yeah, we got stopped out. So yeah, we would have just done a trailing stop and we would have just sold there for a small gain. Because a gain is better than a loss. Always. Always, always, always. Okay, what is he saying? Okay, wait. Okay, something. So what I'm trying to say is the market has to move, right? So when it moves, what does it do? It has to make new highs or new lows. Not always. We have consolidation periods too where it makes equal highs or equal lows. It comes down to trend starts or trend ends, retest that level. Okay, yes, I literally just drew that. I drew, the market moves three ways: up, down, sideways. But it's going zigzag up, zigzag down, zigzag sideways. It never moves just straight down for forever. If price falls to make a new low, what will it do? It'll come back and rebalance. But this happens on all time frames. Yes. What are you trying to say? But no, not all. Yes, it will make a new high, but not always. If we're in a downtrend, it's not making new highs. And that's what ICT tells you. Because a lot of people didn't explain that. That was the main thing about ICT, I think, that set him apart from everyone. He told us how to spot reversals. Because you're saying, yes, in a downtrend, new lows, new highs. But it will keep going down and make lower lows and lower highs. It doesn't always take out the highs or the lows. But yes, a head and shoulders is basically a market structure shift. But not really, because some head and shoulders are just this, lower. Wait, hold on. I hate this drawing sometimes. For a head and shoulders is this, lower, up. That's a head and shoulders, right? You don't need to see a head and shoulders all the time. It can literally be, and that's what ICT does with like S&P divergence. All you need is, it can be sideways. Boom. Once we break this swing high, we are now in a different trend. Not head and shoulders, not stupid patterns. Actual, now you can see the market structure shift. It might not always be head and shoulders. It might not always be an accumulation. Because I've seen some like accumulation patterns on other channels that just don't work. I am not profitable. I'm simply relaying information from someone who is. A lot of people are profitable with different strategies. I've said that, but you're not going to sit here and say ICT is not wrong, is wrong, or isn't great just because someone else is good at what they do. And like I said, especially because a lot of people who you know are profitable with not ICT are the same people who took 5, 6, 4, 7, 10 years to learn how to trade. And I'm not shading them for that. But with retail, that shit is hard. With retail, like random, like, let's see. Let's do some retail, actually. That shit was so fucking hard to learn versus ICT. People are getting profitable in under a year. They're getting profitable in a year. Like, a lot of people who trade retail trade zones like this. Okay, first of all, let me switch my settings to not extend right for once. They trade zones and they say they break and retest, right? A lot of them. We got to break. Well, first of all, we're going this way. We got to break. Retest for a buy. Didn't even go higher. Like, you see what I'm saying? Like, there's no way to know when it's going to break and when it's going to retest. Now, we got to bounce. We got to retest here to go higher. Cool. Yeah, but a lot of them take their profits at the zone. They don't take it up past the zone. Same with, I guess there's another zone here. I used to be really good at drawing these, but I'm not so much anymore. But yeah, this is a good zone because, see, we bounced off of it once. We went down, we bounced off of it again, and then we go up. No retest. There's no retest in any of these. You would have missed out on all these trades. Like, I don't know how retail traders like trade this. Like, some of them do, and they just get in. I think actually we got a retest on this one. We did. So we got a green candle, came back red, boom. You get in here. You get in here. I think of all the retail strategies, trend lines are the best. Tory trades 8 with that one. That's your trade. That is a good trade. I'll give them that. But see, on this one, we broke already back to the zone. So maybe you enter again once we come back. I'm guessing this is the trade now because that's technically the retest. But I feel like this is 2 days worth of trading. Like, you don't, I mean, if you are that person, like a lot of people who trade retail, like, you don't trade every day. There's not a setup every day. Fair. That's fine. But if you trade ICT, there is. We trade the macros. We take it inverted fair value gap. We take it to the next liquidity point. It's not that hard. Even ICT, you can trade the silver bullet. I only trade 4-hour PD array. Good for you. I feel like 4-hour PD arrays takes too long. But hey, good for you. I know a guy on Twitter who also does that. You should be able to win all the time. You do win all the time. You act like trading is just strategy, which is the problem. I guess the market's 90% of the time. I've said that. However, emotionally, I can execute it poorly. That emotions are the main part of trading. You can see this and you can call this trade right now. We're all on live right now. I mean, this is what, 2003 though, so you couldn't trade this. But say we're all looking at this trade right now. 50% of us cannot be scary and enter on this wick. 50% of us can get scary and then enter way down here, and then when it goes back and stops us out, we lost money. That's not the strategy. The strategy works. The strategy works. However, how people trade it is very different. I don't know. Like, psychology is the main part. I am a lady, yes. I'm not directing the message to you. My apologies. No, it's fine. I just want to tell you that. Like, that's the one thing that I feel like is misconstrued in the trading space. Like, a strategy can work. And people say that too. A lot of gurus will tell you that. It's not the strategy, it's you. You need market experience to be confident. You need to back test your strategy to be confident. You need to, not be scared to lose money to have confidence. Like, there's so many reasons. If you trade to, pay your bills or something, you're going to trade a little worse. Like, there's so many reasons why you trade anything poorly. It's not just a strategy. Yeah, risk management is key. Tell them. Yes, risk management is position size. No, but risk management is position size, but it's also how often you trade. It's also if you revenge trade. It's so many things. It is risk management, but if you risk 1.5 per trade, like you said on a 20K account, but you revenge trade 5 times a day, you already risk what, 7%. That's what I'm saying. Emotions is a strong part of it. It's not just, oh, I learned a strategy. Like, there's so many things that go into this that can make you trade poorly. I'm a prime example of that. I know where the market's going. It pisses me off too, actually. I'm like, oh, the market's going here today. Amazing. And then my ass will get on the chart and get faked out by 3 candles or whatever, or a strong displacement, and just start just doing shit. And then, I just lost for the day. I usually make it back though, but. So it's not risk management, it's psychology management. It's both. You can't have one without the other. Because psychology can mess up your risk management. It can mess up your strategy. It can mess up your execution. It can mess up everything. It's all connected. And market experience is another one. Because I was that girl for the longest. I've done drop shipping. I worked in Hollywood. I've done all the cool jobs. And I was a person who tried to pay my way or mentor my way or fast track my way to getting better. Like if I was going to drop ship, I was reading every book and I was getting every mentor and just wasting money before I actually started drop shipping or before I actually started trading. And then once you just get on the charts every day in a live market, like you'll learn stuff. It's not just, there's no 100% win strategy. And stop loss should be defined. No. Okay, so the ICT, that is the one downfall of ICT. Stop losses are not defined because it depends on how the market creates its swing high and swing lows. And sometimes they're super close and you get a great risk to reward, and sometimes you don't. Like this week, we haven't had really close risk to rewards. But I don't know what this guy is doing, talking about. But this is what we're here for. We're here to talk and we're here to learn. So I'm glad he has all these questions and everyone's enlightening JR George. And I've always said that too. Y'all want me to, how can a stop loss not be defined? Okay, a stop loss is defined. But let's say like this. With ICT, right? Your stop loss is a swing high or a swing low. Same with your take profit. Let's go back to my chart here. Some days, your market structure shift looks like this. Higher high, higher low, right above this high, right above this low market structure shift. Boom, boom. Lovely, super tight, stop loss ass trade. We love it. And this happened literally on, what was it, either yesterday or Wednesday. Everyone got in this trade and we had the fattest stop losses in time, and it really sucked. And then there's days where on ICT, we got some strong like displacement somewhere and like it wants to reverse, but we get like a nice displacement and then doesn't want to reverse till way down here. It comes back into here. So now your stop loss is fucking massive. But if you know price action in ICT, we're not in an uptrend again until we break this high. So you have to let the trade play out. It can do all this and then go to your take profit. So it's one of those things where, yes, now you can define your stop loss by your contract size, but if you trade futures, it's only so much you can do. There's not like lots like Forex. We can just do like 1.5 lot or 2.1.0 lot and like shit like that. It's one contract, two contracts, three. There's no half contracts. And then you can use macros or minis. Like, that's it. So like there's only so much you can do. Like I already trade on my live account the smallest amount of NQ contracts. So if the stop loss is just big that day, it's just fucking big that day for me. I can't go smaller than that. And that's just how ICT is sometimes. Or some people will trust the process and like do something like low like this and go. But I've gotten stopped out like right here and it's gone my way. So it's just like scary. And sometimes I'll do a tight stop loss on a big move like this and I'll eat that. I'll eat that little loss and then I'll get back in if it goes down my way. If it's a big, market structure shift like that. If it's something like that, then, it is what it is. But again, that's just price action. Like not every swing low and swing high is going to be the same distance. Yeah, and if you can't explain anything you follow, you should be ready to never have an original thought. What are you talking about? What does that even mean? If you can't explain anything you follow, I just explained it for an hour. People in my comments have explained it to you also as well. Like what more explanation do you need? Not you again. Who? Oh, sorry, I'm not adding every message. Okay, JR George 6. What do you trade? What's your trading strategy? Like what is your beef with IC? Like what is your strategy that you can explain and you trade and it makes so much sense to you and that's why you trade it? I want to know. I'm very eager. He's gotta be under 15. I just don't mess with ICT. That is fair. What do you trade then? What do you trade? Please tell me. It's okay, it isn't a very well known one. Well, I want to know, and I want you to explain to me. Like you made all of us in my chat explain to you ICT, and we did very well, and you still, which is it's fine. You don't have to trade ICT. That's why my live is ICT concepts. So if I say it, you won't know if I'm talking about it. How do you know that? I've traded so many retail strategies. I don't have to know it. Just tell me the strategy. If you can't explain it, you shouldn't be trading it like you told us. For our bias, 1 hour if it's angling to 1 hour, and then drop to 5 minute. Yeah, that's a good strategy. For our 1 hour bias, execute on the 1 minute. The 5 minute. The 5 minute is good. All right, JR George, what is it? I have derived my strategy from Sumo Trader. I feel like that sounds familiar, actually. But what is the strategy? Explain it to us. But I have my own twist on it. Exactly, explain it to us. I have my own twist on ICT as well. Like, explain it. Like, I just explained market structure shifts, entries, all that, stop losses. I need you to tell me, like, I trade only breakouts on this. I trade... It would take too long if you have I have the patience. Let's go. It's Friday, and I'm a trader who's unprofitable at the moment. I'm not going out, and I live in Mexico. So, are you willing to listen without talking? Yeah. Should I add you to the live? You want to get added to the live and explain it on video, or are you going to type it out? All right, chat. He's about to explain it to us. JR George is explaining his trading strategy to us in the chat. So if you're new and you're just joining, read the chat. You look at trends, starts, and ends. These are your levels. Okay. You look here because it can tell you where price may fail and new high or make new if we fail. And how do you determine that? We can reasonably assume it will go back down to the trend start. That's literally ICT liquidity to liquidity. A candle body closed below that level. Yeah. It is a rejection. That's a liquidity sweep. Sumo Trades. Is he on YouTube? I guess not. Which is fine. But I don't see him on YouTube, so it is what it is. Okay. Rejection and also candle body closed above the 50% level. Yeah, that's literally price action. ICT talks about all that stuff. That's literally just a liquidity sweep to one side, then you take the trade to the other side. You trade in a range. Your trend range could be an hour candle, 4 hour candle, 15-minute candle, and you wait for it to be swept on one side, and then you go to the next. Okay, but look, my point has been, it's explainable purely through the charts. Exactly. So why, I don't understand how that is, you're acting like ICT doesn't explain it through the charts. No liquidity assumptions. It is liquidity there. That's why your chart goes there. You think your chart just goes there for fun? No, but ICT explains chart actions through higher concepts. And that's the problem why. He's explaining everything you're talking about. He just has terms for it. I don't understand what the problem is. Liquidity relies on people placing their stops there, right? No, it just means a lot of orders are there. It doesn't mean their stops are there. That's why liquidity sweep usually takes out stops. But a liquidity point is just where a lot of orders are. Which a lot of profitable traders who trade retail, that's volume. Same shit. So what I'm saying is the way ICT explains this stuff, can be incorrect under certain conditions. And what conditions are those? And explain why they would be incorrect. Because you're really not explaining anything. You're just saying how much you hate ICT, and then you're explaining things that he already thinks. At least losses in the trade, even if it's perfect. In what case? Not necessarily, because with ICT, you're waiting for a reaction. You wait for a candle close above or below, and you're waiting for a liquidity sweep. And you don't take every fair value gap. I just explained that as well. That's why inverted ones act a little better. I just saw if a fair value gap get faked out. Why doesn't price bounce with every fair value gap? It actually does. I can show you. It doesn't bounce off all of them because of high volume, but there's a lot of them that are just like here. All these fair value gaps have been touched in a consolidated market. This fair value gap has been touched. 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 This fair value gap was touched and they rejected off of to go down and then go higher. Every fair value gap has been touched. I will agree with you on the sense that on the higher time frames, some fair value gaps, like on the lower time frames, you want it to bounce off of it and go higher, but on the 1 hour or 4 hour, it will close fully in the fair value gap, maybe even below it, and then still go off of it. It won't need to go in it. But every fair value gap has been touched, but this one so far, actually no, this one has also been touched. So what are you talking about? Every fair value gap we've seen has been touched today and on so many other days. Every fair value gap has literally been touched besides this one, but then we gotta touch here to go lower and then go higher. It can get touched later on. This one has been touched. Look at it. It might not happen when you're on the chart, but it's been touched and it reversed literally from it to go down lower. It got touched here and it got touched here. Every fair value gap has been touched once. So next topic of why ICT is wrong. Why does price bounce off every fair value? Like what makes some of the concepts? Volume. Fair value gaps are imbalances because we're running up and the market has to balance itself. ICT, that's what he teaches. So it has to come in balance and it has to reverse from these places because there's a bunch of volume. Volume orders, whatever you want to call them, are at swing highs and at imbalances. And people who have the money need to come to these places to buy or sell their orders to push to markets. You think if Elon Musk wants to put in some money in some shit, he can just get on the chart randomly on a consolidation market and just sell or buy some stuff? The orders are not going to fill. Even with everyone in this live putting in their biggest fucking trade, it's not going to fill. Especially if you traded options, you would see that. When you trade options versus like futures and forex, your shit will not get filled sometimes, and there will be volume, and you will be stuck in a contract because you cannot sell that contract back. You can see that shit, and ICT just tells you where you should sell, and that's why I always say my take profit points are always here. Even on Robinhood, if you trade on Robinhood, which I don't suggest, but it's very beginner friendly, you've seen it where your order has not gotten filled. Your order has been sitting there for 5 minutes after you try to close a trade or enter a trade, because there's no orders there on the other side of these trades. That's just it. That's literally it. I don't understand. Why does the market have to rebalance itself? So orders, I just explained, so orders can get filled. How on every time frame? Because it's moving in real time. It's moving in real time. That's like asking how does it do it on every time frame? That's like it's doing it on this time frame. So if you just zoom out to an hour, that's just saying like this is an hour or this is 2 hours. That's all it is. It's just like showing you what this data looks like on a bigger time frame. Because that's what I'm saying, on the smaller time frame, you can get faked out by all this versus on the big time frame, you just have one big up candle. Like, I don't know when do you identify when it starts to begin an imbalance? There is no begin. It just happens throughout the day. A market just imbalances. A market will run up. And yes, sometimes it's news. Sometimes it's, like these are companies. The NASDAQ is tech companies. Sometimes it's, a new iPhone come out. Sometimes it's other fundamental stuff. But That's just how the market moves. How do we mark out when it will start filling them? You don't. You wait for it. Now, ICT does time and price. However, the market just moves up and down. No, one stock doesn't stick to the NASDAQ. But there are stocks like Apple and Tesla and Amazon, like the big 8, that affect all other stocks. Like if Amazon does some shit or Tesla does some shit, a lot of other tech spaces will lose their minds or react. You know what I'm saying? Like those are the big kahunas. Candles can simply wait to visualize the price. That's what I'm saying. Like you don't know. That's why sometimes like as a trader, as a beginner trader, I like the moves like this where it runs up. Because when it's choppy up and down, I get scared, but I know it's just going to fill these imbalances. It's going to fill these fair value gaps. Like we know that. Now, if you have the patience to sit through it and you wait for it to come up here, you know, then you just sell here. There is no, you're acting like any trader you trade with, they don't give you a reason why the markets move the way they move. Every trader will tell you that. They just tell you to learn a strategy that works. Algos, quants, banks don't look at intraday charts. They don't have to. We do. The intraday charts are for us. You can sit. There's so many retail traders who look at the hour chart. What does that have to do with anything? Yes, there's swing traders who trade the hour chart. That isn't like you're saying a bunch of irrelevant stuff. My core values in trading are 1, the only errors that can be made are for you if you look at, and 2, if you look at a chart. You should be able to find any trade. That doesn't make any sense. You have to have a strategy to know how to find any trade. No, you want to wait for it. That's my whole point about ICT. When you trade retail and shit, sometimes your entry will leave you. Like these big imbalance candles will leave you. And if you trade only a trend line, like some days, like obviously you can get in late, but days like this left you. Versus ICT, you waited for it to come back into this gap. Like it left you, but you know it's coming back. You know what I'm saying? Like there are trades that will leave you. There's nothing wrong with waiting for an entry. That's the best part about ICT, I think. It gives you the patience to wait for a setup. If you can't find an entry, you should reasonably be able to enter position to target that entry. Dude, I'm about to get off this live. You're talking in circles. Again, I'm ICT trader. It's on my bio. If you want me to test your strategy, you have to explain it and DM me later, and I can back test it tomorrow. But you're talking a lot of in circles. You're not making any sense. And I wish you the best in your trading journey. And I hope, you'll get profitable one day. But if you don't have to like ICT, I just followed this girl called The Gorgeous Trader. I suggest y'all follow her too, support other girl traders. And she said ICT doesn't even make any sense to her. And I said, that is fair. But for me, it instantly made sense. But you're not going to get on my live and tell me it doesn't work when he has the most profitable traders in the game. When people are getting funded and profitable in less than a year. When I've made 4 or 5K days within 4 months of trading. Like, you're not going to tell me it doesn't work. And then, like I tell him, Uncle Ruckus, you can use order blocks. You can use breakers. You can tell you why it's the case. Why do you need explanation? You didn't even explain your strategy to us at all. You didn't tell us your strategy at all. You didn't explain it in depth at all. But you want us to explain you ICT to the tick, and we keep giving you explanations, and you're not even considering or listening to them at all. That's crazy. That is literally crazy. But it's literally Friday night. It's 9:23 p.m. Y'all go have fun. Go celebrate. We got a win today. JR George, if you want to live trade with me on Monday, not come on my live, but watch me live trade ICT concepts you can see, then you can do that. But my strategy is to the tick. So is ICT strategy. It's literally to the tick. What terminology? You haven't explained anything to us. If you want, I'll hop on a call with you and explain after. No, I want you to just DM me or give me a voice note. I don't know about a call. I don't know how to call without giving you my number. How about why someone else made pizza? Facts. Yeah, I mean, you just seem like an ICT hater, which is fair, but this is the ICT live. I trade ICT. We're all ICT traders in here. So I think you need to go to another live or just not ask dumb questions. After we explain things to you in depth. Like me, Uncle Ruckus, and another guy in my live, and you didn't even listen to anything we said. You just kept asking, well, why? Well, why? Like a kid. I don't know. There's so many questions you can ask why to. I'm literally a black person. Why do people hate us for no reason? Do you know the answer to that? Exactly, no. But it exists. Just like ICT strategy exists and it works. Like, I don't know what more you want me to say to that. But yes, okay, I'm getting off live. I'm going to call my parents because it's Friday and they're up late today. And yeah, I'll be here tomorrow at 8. So, Jared George, please don't come unless you're going to learn ICT. Or give me a strategy to backtest. I'll backtest your strategy tomorrow. If you can explain it to me and you want to see it and see how good it works. But I don't know what else you want me to say. I hope you're enjoying Mexico. I miss it. Lived there for 2 years now. I live in Brazil. Thanks. I do enjoy Mexico. I definitely want to maybe go to, next? Thailand. 8 p.m. So right now it's 9:25 p.m. Eastern time. I get on at 8. And then I trade every stock market open, now the macro. I'm going to try trading just the macro, so 9:45 a.m. in the morning. So 9:45 a.m., 8 p.m. Eastern time. Gives y'all time to party, work out, read, watch TV, all the things. Where I do love black women traders. There's so many of us. And there's a bunch of us on Twitter. If you're not on the Twitter space, there's a bunch of us on Twitter. Reversed it, my bad. Every effect has a cause. J.R. George, please. Are you trying to philosophize trading? Is crazy right now. That is crazy work. But yes, good night regardless. Thank you. The universe keeps expanding. Want me to figure out why? Right, Uncle Rick, he's like asking why for everything. Do you want to know why babies are born and women and not men? Like, I don't know what more why questions we can have tonight. And I thought about doing lives with not backtesting and not trading, just like talking about things. But I just feel like, I don't know. I feel like people only talk when you're teaching or you're showing a screen versus just my face. But if y'all want to just talk about the meaning of life, we can do that in the middle of the day tomorrow. My final thing is that ICT doesn't explain the effect and why that he does. He has a time and price theory. He literally explains why the markets move the way they move. I just explained it to you 5 times today. So I'm going to get off this live because you're really frustrating me. And it's okay. And it can be identified by other concepts because every other trade, there's so many traders, Scarface trader, J Dunn, so many retail traders who are millionaires, ICT, Swaggy C, who say ICT just teaches things that already happen in the markets. They do identify with other concepts. They identify very good with trend lines and EMAs, in my opinion. That's why I said if I was on ICT, I would do trend lines or moving averages. They don't really align with levels, obviously, but they do sometimes. Like, they do align with other concepts. You just trade the one unicorn of a setup model, but what you explained as you're trading, you explained liquidity to liquidity. You literally said a trend, and you know when it goes to the start of a trend, a liquidity point is going to go up and go back to the other side of the trend. Like, you literally just said that on live. Sorry, ICT calls it liquidity sweep. Are you bad? What do you want us to call it? Are you mad at the terms he uses? I don't understand. The markets move this way, whether you trade price action, S&T, EMA, like whatever you trade, the market is, we're all trading the same market and we're either all making money or we're all losing money. So I don't understand. And like I said, people have come out at their prop firm saying ICT traders have made the most funded traders at their firm. So it works, whether you hate him or not. If you don't like him, watch TJR. He teaches the same shit. If you don't like him, watch Justin at Tactical Traders. Teaches the same shit. He does add some randomness, which is fine, but it's not going to his strategy. It's just to weed out people like you who don't care about his strategy at all. And he just rambles a lot. That's it. Like, he never said the markets aren't random. No one's ever said the markets are random. No one's ever said that. But the market does what it wants to do. There are days when you have a perfect setup and the market cannot go into a fair value gap. It's rare. That's why strategies are 70%. But it doesn't mean it's going to go into every time or on that day. It usually could take a few days to do something. But it usually always does it eventually. So the markets aren't random. He's never said that. I've never said that. Anyone in my life has never said that. So for real, okay, for real, I'm getting off the charts. I gotta call my parents before they go to sleep. Have a good night. Dun dun dun.